S&P 500 Index, SPX chart analysis. Bullish sentiment remains strong. In the next few minutes, we will analyze the recent performance of the S&P 500 Index, SPX, and discuss the factors influencing its movement. Despite a small decline last week, the overall sentiment remains bullish. We will also examine the Federal Reserve's stance on interest rates and the market's reaction to economic reports released during the week. Last week's performance, the S&P 500 Index, SPX, closed down by a small fraction, losing negative 0.26% for the week. However, it is important to note that the index had been consistently rising throughout 2024. The NYSE Advance-Decline Line continues to support the SPX, indicating a positive market breadth. Conservative strategy. The conservative S&P 500 strategy is designed to protect investors from bear markets. It is based on long-term chart analysis and does not make changes based on emotions or news events. Short-term declines are endured and should not trigger sell signals. This strategy allows for fluctuations in the market and avoids trying to time every little up and down movement. Bull and bear report. The aggressive bull and bear report follows short-term indicators in more detail. It takes into account market sentiment and technical analysis to provide insights into short-term market movements. Federal Reserve's stance on interest rates. Investors are looking ahead for the Federal Reserve to begin cutting interest rates. Fed Chair Powell stated that they would need to see good inflation readings before making any rate cuts. St. Louis Fed President James Bullard believes that the recent job report increases the likelihood of an interest rate cut in the near future. Analysts expect the Fed to have enough conviction by June to begin trimming rates. Market sentiment. Bullish sentiment remains strong, with 51.7% of investors expressing a positive outlook. Neutral sentiment stands at 26.5%, while bearish sentiment is at 21.8%. It is important to note that the historical average of bullish investors is 29.2%. This high level of bullish sentiment may indicate that the stock market is approaching a top market breadth. A signal of strong breadth is found in the percentage of stocks that have hit 52-week highs. On Monday, 106 S&P 500 components, or 21.2% of the stocks in the index, hit new 52-week intraday highs. This was the highest single-day reading since May 10, 2021. Economic reports. Several economic reports were released during the week. The ISM Services PMI fell slightly, indicating slower growth in the services sector. New orders for U.S. manufactured goods experienced a significant decline, primarily driven by a decrease in transportation equipment orders. The number of people claiming unemployment benefits remained unchanged, while U.S.-based employers announced plans to cut a higher number of jobs compared to the previous month. On a positive note, the U.S. economy added more jobs than expected in February, although the unemployment rate rose slightly. Conclusion. Despite a small decline last week, the S&P 500 Index, SPX, remains in a bullish position. The conservative S&P 500 strategy is designed to protect investors from bear markets and allows for fluctuations in the market. The Federal Reserve's stance on interest rates and economic reports will continue to influence market sentiment. It is important to monitor bullish and bearish sentiment levels as they can provide insights into market tops and bottoms. Aggressive traders may consider investing in the RIDEX Nova S&P 500 Fund, RINVX, or other bullish S&P 500 index funds or ETFs such as SPY. As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.